Between investment tax allowance and pioneer status, which one is the best option for RSP's neighborhood to reduce the company's tax liabilities? RSP's neighborhood is a manufacturing company involved in the production of promotional products, which is Product X, to all government hospitals in Malaysia. RSP's neighborhood is eligible to apply for the tax incentive that available under the Promotion of Investment Act 1986 and can choose either to claim pioneer status or investment tax allowance as it is mutually exclusive. RSP's neighborhood should not apply pioneer status as there are incentive for the exemption. This is because the pioneer status should not have losses, but the company is having losses as they suffer losses for the first 4 years. If RSP's neighborhood use pioneer status, it will result in a substantial capital allowance claim and a lower amount of the exempt income because pioneer activity is not for capital-intensive business. Under investment tax allowance, RSP's neighborhood will be given a deduction of 60% on the qualifying capital expenditure for 5 years from year assessment 2017 to year assessment 2031 and will then be utilized against 70% of just statutory income. The remaining 30% will be taxed at the current corporate tax rate, and the unabsorbed investment tax allowance from year assessment 2017 to year assessment 2020 can be carried forward for an indefinite period. So, RSP's neighborhood should choose investment tax allowance for its tax incentive because the company is a capital-intensive type of business. Investment tax allowance will reduce the tax liabilities of RSP's neighborhood. If RSP's neighborhood choose pioneer status as tax incentive, it is crucial for the company since the company is a capital-intensive.
RSP is a new manufacturing company. The commencement date of business will begin when they embark on production of manufactured goods. For the first 4 years of operation from 2017 to 2020, RSP has minor losses, and the 5th year on 2021, finally the company earns small profit. RSP can deduct the current business loss against aggregate income. If there is any unabsorbed loss, it can be deducted against aggregate statutory business income. RSP has purchases of machinery amounting to 40 million. This acquisition of machines will give capital allowance. The allowance given are initial allowance 20% and annual allowance 14%. The capital allowance will be against of the adjusted income to statutory income. Any unabsorbed capital allowance can be carried forward to future years to set off against the same business income. In addition, 500,000 for staff remunerations costs prior to commencement dates are qualifying RSP to claim capital allowance as it is qualifying expenditure, even though it is cost in prior commencement date of business. RSP has recommended expenses on non-current asset or acquisition of assets that fall into plant, machinery and industrial buildings to get allowance given for deduction, such as initial allowance and annual allowance. The company can claim for capital allowance on the expenses. Otherwise, the maximus on the capital allowance, the company can claim by acquiring commercial vehicle, as there is no restriction on the qualifying expenditure. RSP needs to make sure that the expenses incurred in the prior commencement date is qualifying expenditure, as the company can claim capital allowance. If not, it is not deductible. To reduce tax liabilities, we really recommend RSP to spend more on allowable expenses that are gains incurred wholly and exclusively in the production of gross income. Basically, spending more on the expenses nature of business can be deductible. RSP should avoid and minimize non-allowable expenses, as it will add back and will result in high income. For example, instead of renovation, the company can do repair and maintenance on the buildings or factory. Additionally, make sure to incur double deduction expenses as it will deductible twice, such as employing more disabled employees. This will lessen the tax that RSP will pay later.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Amira binti Abdul Malik and I'm going to explain on question C, which is leasing or outright purchase of asset for the asset not qualified under ITA and choose the best option. So in the case of outright acquisition of the asset, the amount of capital allowance that can be claimed is based on the entire cost of the asset, limited to the cost of 100,000 ringgit for the asset cost less than 150,000 ringgit, and limited to 50,000 ringgit if the asset cost is more than 150,000 ringgit. So, if the company, which is RSP Sendirian Berhad, acquired the asset, then the company would be entitled to claim initial allowance and annual allowance for the first year and annual allowance for each subsequent years until the full relief is given for the qualifying capital expenditure. In other case, if RSP Sendirian Berhad acquired the asset through leasing, the company would not be entitled to claim the capital allowance, as RSP Sendirian Berhad is not the owner of the asset. RSP is entitled to claim the full leasing charges as a revenue expenses if the asset is incurred wholly and exclusively in the production of income of the company. By acquisition through leasing, the full amount of lease rental can be deducted in the given revenue in the year the asset was incurred, while the capital allowance need to be spread to various years according to a specific rate. Other than that, the leasing charge can increase the adjusted losses if the business has a current year business loss. The current year business loss would be allowed to shelter other income in that current year at the aggregate income level. In this case, RSP Sendirian Berhad has already forecasted losses in the first 4 years of operation. Thus, RSP can increase the adjusted business loss. Besides, the unabsorbed business loss can be carried forward to be set off against any business income in the future years at the statutory income. So as a conclusion, RSP Sendirian Berhad should acquire the asset through leasing, as it will reduce the business chargeable income. That's all from me. Thank you.
Assalamualaikum and a very good day to my lecturer. My name is Nur Mazatul Amira binti Zulehan. So, I will proceed with the restriction on loan. So, RSP Sendirian Berhad borrowed the loan from the financial institutions and used the loan to invest in the subsidiary, TAX667 Sendirian Berhad. This indicates that RSP Sendirian Berhad borrowed the loan for the purpose of investing in the subsidiary and not for the purpose producing the business income. Upon the investments, RSP Sendirian Berhad is required to pay the interest rate at the market rate, which is higher than the interest rate that RSP charged to TAX667 Sendirian Berhad. So, this will increase the interest expense of RSP Sendirian Berhad and the income will be reduced. Based on different types of interest rate applied, we could say that TAX667 loan investment is less than RSP borrowing. So, not the whole amount of interest is deductible, but only a portion of amount of interest is deductible. Thus, we would like to advise RSP Sendirian Berhad to charge higher interest rate than market rate in order to increase the interest income and to cover the interest expense incurred for the financial institutions. Thus, RSP Sendirian Berhad should arrange its subsidiary, TAX667 Sendirian Berhad, to borrow directly from the bank in order to prevent RSP Sendirian Berhad to produce non-business income and to add back the interest loan against gross business income. Lastly, RSP should establish separate bank account to hold specific loan money exclusively for business use in order for the interest on loan would be deductible and easy to manage.
Now I will continue with the tax planning on disposal of the fixed asset. An asset is disposed of when it's sold, conveyed, transferred, assigned, or alienated with or without consideration. The balancing charge or balancing allowance will arise in the event of the disposals of the plant and machinery, and a balancing charge will arise when the disposal value exceeds the residual expenditure. While for the balancing charge is added to the adjusted income, and this will increase the statutory income from the business. For the balancing allowance, it arises when the residual expenditure exceeds the value of disposal. The allowance will reduce the statutory income from the business because the balancing allowance is deducted against the adjusted income. The disposal should be made within 2 years of the ownership in order to avoid any clawback of the capital allowance. In conclusion, RSP Sdn Bhd may dispose of the machinery to Inara Sdn Bhd because there will be no balancing charge or balancing allowance that may arise on the disposal, and it's also helped RSP Sdn Bhd to reduce their tax payable.
Next, we move to the last one, which is group relief. Based on the eligibility conditions, TAP Sdn Bhd and Inara Sdn Bhd are qualified for the group relief because percentage of shareholding held by RSP Sdn Bhd is more than 70%. Meanwhile, TSB Sdn Bhd did not qualify for group relief because percentage shareholding held by RSP is less than 70%. And RSP Sdn Bhd also did not qualify for group relief because RSP Sdn Bhd now is enjoying tax incentive. The claimant company here is TAP Sdn Bhd, while the surrendering company is Inara Sdn Bhd. So, we would like to advise RSP Sdn Bhd not to choose tax incentives if RSP Sdn Bhd want to be eligible for the group relief. Next, RSP Sdn Bhd should increase the percentage of shareholding in TSB Sdn Bhd up to 70% or more in order for TSB Sdn Bhd to qualify for the group relief. So, that's all from our group. Thank you for watching.